This time, we're going to talk about how institutional investors can get access to DeFi. We have 3 experts here and a very, very great moderator, Sheraz, to moderate the panel. So, Sheraz, I'll give the word to you and enjoy the panel discussion.
Thank you so much, Victoria. It's a pleasure to be back at the European Blockchain Convention. It's really incredible events. I hope you've been enjoying everything thus far. We have a great panel for you here today, 45 minutes. We will try to take some questions as well, so feel free to put those in the chat. I'll be your moderator today. My name is Sheraz Ahmed. I am the head of business development and co-executive director of the Crypto Valley Association and the managing partner of Storm Partners. Today, we have with us 3 very special guests who I think I will let them each individually introduce themselves. And today the topic of discussion will be how can institutional investors get access to DeFi. So maybe Philipp, you're the first one on my screen here. Would you like to kick us off by giving a little intro to yourself?
Sure. Yeah. So I'm Philipp Pieper. I'm the co-founder of a company called Swarm Markets. I've been in my past life, I was in institutions like Deutsche Bank and Allianz Group, then becoming a tech entrepreneur. I did several startups that, I brought to Silicon Valley and then was there for 10 years. And at the sort of end of that, I was starting to get into decentralized technologies, which at the time was not yet named and coined crypto. And then sort of, stumbled into that space in 2016 and 17. Did a DAO, which is called Swarm Market or Swarm Network, which was one of the first premier projects in security token landscape. And was always embedded into trying to resolve compliance technology merged with, different ways how to do that still in decentralized fashion. So we started Swarm Markets 2 years ago. We're just becoming sort of public a little over a couple months ago. And it's been a pretty interesting market, to say the least.
Definitely, really looking forward to deep diving a little bit more into Swarm Markets and some of what you've been doing there. Maybe next up, Chris, would you like to introduce yourself as well?
Sure, Chris Sullivan, co-founder and PM for Hyperion Decimus. We run a fund called Liquidity, and it's a quant-driven multi-strat. We were kind of the first, similar to Philipp, in the space, first movers to run masternodes staking all the way back in 2018, first option contract on Bitcoin. So we've kind of pushed the envelope within our mandates. I'm a chartered market technician, cut my teeth at Morgan Stanley, basically ran a vault fund for about a decade before jumping in full tilt to crypto, which took place in 2018. Been a personal investor since 2013, and basically couldn't be more all in, both philosophically, ethically, and from an investment standpoint.
Fantastic, Chris, thank you so much. And of course, last but not least, Lone, would you like to introduce yourself?
Yeah, so Lone Schroeder, I'm the CEO of Concordium, and Concordium is a blockchain. We are a layer 1 blockchain with ID built in at the protocol level, which fits very nicely with the new demands from regulators in terms of DeFi. I'll tell more about that. My background is from banks. I've worked for Credit Suisse. I've worked for Saxo Bank, which was the first platform, actually, client number 100 at the internet. Our founder founded Saxo Bank, and I've worked with other institutional banks and also with systemic important banks with regulators most of my life. And what we are doing with our blockchain is to have a blockchain which is fitted for the regulation and meeting the regulators' demand. As you see, they're coming heavily in now.
Fantastic. Thank you so much. I mean, that's a very interesting point that you mentioned quite a few times, regulation and regulators, right? I mean, DeFi being here for a few years now, I think at the beginning of DeFi, I mean, kind of, would we have ever seen kind of regulation being so close to it? It seemed a little bit like the antithesis at some point. And now we have Philipp here in Swarm Markets being the world's first regulated DeFi exchange. Can you tell us more about this, and also maybe a little interlude into why you chose BaFin to be regulated with?
Okay, so first of all, choosing a regulation is not something that you just choose. It's more organic than that, right? So I'll answer that question in a little more, talking about the context here. So to us, like, we came at it more from the security token angle initially, which was effectively saying, the simple question to say, why tokenize? It's always the question, like has a lot to do with how to actually have liquidity at the end of the day. So liquidity is incredibly important to have the exchangeability of the units that you produce as a digital asset version. Any kind of benefit that you quote with regards to security tokens always has to do with the fact that there is a market, that there is fractionalization, that there is 24/7 tradability. So for the longest time, we were rooting from the sidelines to players like Open Finance and T0 to really create those markets and make that a pleasurable experience that actually really leverages the blockchain to its core. Unfortunately, that didn't unfold the way that we hoped it to unfold. So, along the way, we effectively said, okay, how can we help create these markets? So we were then, exploring effectively different regulatory environments. America was becoming really difficult because it was a multi-dimensional regulatory challenge at that point in time. And we saw, like, across Europe, we saw a lot more forward-leaning attitudes towards the concept of using blockchains for financial instruments. So we're engaged in different regulatory environments, including Liechtenstein, Switzerland, Jersey, the UK, and so forth. So my background, I'm actually German, where, the last place on earth that I thought would actually move in this direction and do something innovative was actually Germany. But then, to our biggest surprise, actually, that in the end of 2019, actually, the German government introduced legislation around amending the Banking Act in Germany, which actually defined a lot of the crypto assets as financial instruments, which then had the sort of conclusion effect that saying any kind of service provider which touches those actually has to have a full banking license of some kind. And we were then actually saying, okay, this is actually not bad news like a lot of people actually perceived it, but we found it to be actually incredibly good news because it clarified that role of us as an organization, of organizations like us, to deal with these kind of assets. And it also clarified how the financial ecosystem would see us. So to us, the choice there, and there's other competing like regulatory environments that you could almost claim that do similar interesting things. But to us, the trade-off of having a scalable, large regulatory environment that has a reputation, and embedded into a larger European market, paired with the understanding of the regulator that there is something here that they want to positively sort of enforce, was a good mix. So ever since, it's been obviously a ride. I mean, like everyone engaging in regulatory processes, it takes a huge amount of effort to get through that process. But so far, it's been an incredibly good experience to get to these milestones that we've been able to achieve. And I think, honestly, the next 12 to 24 months, not just in Germany, but overall, with all that clarification happening, there's really a big unlocking of what the blockchain can do for financial instruments in general, but even for crypto in more specific areas.
Yes, definitely. I 100% agree, especially when you look at Switzerland as a jurisdiction as well. As you mentioned, I mean, they just brought out primary issuance of security tokens and the first security token exchange, STX, to be licensed very, very soon. So it's very, very exciting space. Well, maybe to bounce off of what you said, Chris, I mean, do you believe that we need regulation to allow access to institutional investors? And maybe you can give us some insights on what your clients think about this.
I think the first layer of regulation is supposed to prevent investor loss via fraud, right? Unfortunately, we've seen time and time again, it pretty much never does that in the public traditional finance markets. So it's really for the community, I'm sure Philipp would echo this, is a set of guidelines where we can operate businesses and expand the breadth of services and products, as well as what I do, which is invest in those products and services. I think we do need the framework structurally, business, bank rails, all of that stuff does need to be outlined and have a lot of transparency. Europe's actually quite forward thinking. I agree with pretty much all of it. I'm not a massive fan of stablecoins, so I actually like the way they classify them. But it's just interesting from a institutional perspective because they're looking for rules of engagements to access the markets. and they're really not going to ever be able to write them in a way that's going to make everybody go all in my opinion. I think, as far as the European regulators, I'm not as familiar as I am with US. US typically rule from precedents. So you're going to see bad actors get uncovered for a plethora of reasons. And that's where the precedents and then the legislation that will come behind that will have a genesis. So from our perspective, it's kind of stayed, nimble and diversified because certain protocols may not have the audit strength that others do. And I think when you're looking at the space as a utility itself, that sort of puts you in a more investment grade echelon. And from our experience with institutions, that's what's willing to take a look at first.
Mm-hmm. I see. Wow, wonderful. And I mean, building on top of that loan, Concordium, I think our audience is very, very curious as well. I mean, you're building on top of a lot of this regulatory path and being an IT layer one which where you went to by ease regulatory compliance. I mean, can you tell more to our audience a little bit about your thought process of this and how it first came to be?
Yeah, so I'll quickly just touch upon the narrative. Our offerings on Concordium, which is ID at the protocol level. That means that anybody who wants to transact on Concordium are ID'd. This is creating trust between the parties. One of the biggest problems, remember, in the world is lack of trust, which is costing as much as 4-5% of GDP worldwide. So the trust is there, you know who you are transacting with. The other thing is that if the regulators want to reveal who have done what at what point in time, all transactions comes with this ID stamp encrypted. So we are creating trust, but we keep the privacy. So that's a core fundament. We have other things which are needed in order to create substantial and institutionalized product, like a stable and low transaction fee. Stable in euro, but denominated in our CCD, which is our token. But again, you would know, and as you know, when you have worked in banking, transactions fees are going towards zero, and this is how it should be. So there's nothing I have seen in the couple of years I've been in the blockchain space, which is surprising me. Regulation are coming in naturally, because I don't see the blockchain space any different. It's just a new technology and it's decentralized, and you have a lot of benefits in it. One of our advisors, Michael Jackson, was reminding me, but remember, it's just like now we sit here at Zoom, but we still use the telephone companies, say, lines in order to provide our Wi-Fi. We just pay it differently now. So if you go back to this, could have been a call in the old days where you're paying for the call. Now we pay for the line, and I think you can compare actually the DeFi a little bit to that. That's just a new way to actually transact. It's the infrastructure system which is different, providing a lot of benefits, but regulation is exactly the same. It's coming in Europe. Remember, now we will have the AML demands, will not have the possibility to be anonymous, and also the MiFID now for whatever was not covered in MiFID, so to protect the users, are also coming into to the blockchain space. So I don't think it's surprisingly, but it's difficult because you have a lot of startups, and if you know how much large institutional organizations are spending on the whole compliance regime, that's also moving into to blockchain. So what we have done in Concordium is to launch a regulated decentralized finance laboratory, and we invite anybody to participate. We have added a good part of our Genesis token to this 100 million euro worth of grants. So whoever from the, say, institutional side, from the crypto environment, from blockchain, please join us in our Zurich lab, so we can enjoy the big benefits of the decentralization and building that in a safe manner for the users.
Fantastic. No, thank you so much. A very interesting metaphor there with the phones, the phone lines. And so if we continue on the structural point that you're mentioning, and more specifically, transactions. Philipp, with Swarm Markets, I saw on your website it's defined as a high liquidity DeFi protocol. I mean, can we talk about the importance of liquidity in this market?
I mean, liquidity is what everything's building on, right? In the trading space, and we're not talking about NFTs right now on sort of but even NFTs, they have a disadvantage because they're not as liquid. So you have sometimes like these spreads of 30 to 50% in NFTs because there's not the efficient market to bring it all together. And I think, and we didn't initially think about DeFi as much, but suddenly DeFi took its path last year, and what I think DeFi has really brought together is just this composability paired with the sort of network liquidity. So in a way, number one, asset owners themselves can become part of providing liquidity, which is a very unique concept when it comes to comparing it to traditional financial markets. And then, benefit from actually doing that. So there's, something that, suddenly comes from a professional environment of professional market makers doing that into actually some realm that is actually less sophisticated and actually, provides, similar value. But the second piece is that you can actually have the asset holders themselves then suddenly start to build their market. And not every asset is high liquidity to start off with, but you have to advance and graduate into the later stages. So you start off with things that, really the initial investors, the initial holders really care about, that then gradually grow into wider groups of people. And then, obviously the high liquidity market in the end is what, then everyone knows of. There's a more commodity around it. And there's obviously a very big depth of liquidity that is provided there. But I think that kind of progression can actually be done really, really well with the programmatic environment that DeFi provides, right? And so we'll see actually much more of those tools then be applied to, even off-chain assets that, so far are not playing a big role in the DeFi ecosystem. But the crypto assets, as they've been tested in DeFi, have been sort of a really good test bed to see, what is a successful tool to apply, and what is something that probably falls by the wayside, either because it's too complicated or it's actually something that didn't instill trust or wasn't actually learned by the end consumer as well.
Thank you. I think that inclusivity part is really hits the nail on the head for me there. But Chris, we actually have a question from the audience, which I think interjects quite well here. Is what are institutional investors not allowed to do in the space? Do you have some thoughts on that?
Yeah, where there's gray area is where these things are securities, right? And so within the three main ecosystems in DeFi that you can invest in, lending or collateralized lending, that really, I can't argue that it's not a security, right? So I think they're looking for clarity there, because obviously part of their impetus for looking at it is a hunt for yield. A lot of pensions and endowments have obligations they have to meet, and with interest rates and dividends so low, they have to look for something to pay their constituents. So I think the where it's on the ledge is whether there's clarity on this collateralized instrument is a security as defined by blah 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 Act, 40 Act, 30 Act, etc., 34 Act. That's really the hang up that we're seeing as far as trading of like the platform tokens like Uniswap or Comp or Aave. They're indifferent to that, and they think that that's one way to participate in it, but it's really focused on yield generation. Automated market making is totally gray. They're not very interested in doing that because it's too confusing. So it's mainly on the lending side. Good question, though.
No, thank you for your thoughts.
Just to interject one more piece, running nodes and then participating in staking pools, they're just kind of coming around to, because the concept of lending is easy for all of us to understand. Validating a transaction, getting paid in the native token is a little further out on the curve for them at present. Yeah. But to me, it's double compounding of a finite asset. So I love that strategy.
Oh, fantastic. That's definitely coming. Pablo, I hope that answers your question there. And maybe follow forward a little bit more. I mean, Loan, your protocol is definitely attracting a different type of audience, right? And the kind of the DeFi degens that we see around us sometimes. I mean, tell us more about how your adoption has been thus far. You mentioned kind of open grants and some of the things that you're offering. I mean, can you tell us more about how it's been accepted?
Yeah, so we just launched on the mainnet this summer, and we haven't our token listed yet. That will come first thing in the new year. So it's still a very, very new protocol, but the amount of attention we have received just in the latest weeks after we launched the regulated decentralized fintech lab, but also during the weekend we launched, because we also have to have some fun. It's difficult. I'll just jump a little bit on your question, because I spoke to JB, who is one of the Tesla founders, and about creating excitement, because I sit at the board, I'm the vice chairman for Volvo. So how do you create excitement? Like a Tesla valuation is really interesting for all OEMs. But also when we now work in the decentralized fintech space, regulation is not really creating excitement. So we talked about creating excitement. So we also want to have some fun in Concordium. We always talk about our regulatory compliance and readiness. So we launched this weekend with Magnus Carlsen just NFTs on Concordium, and that also got a massive response. So we also want to use our blockchain for gaming and fun and all that, but always with the ID in mind. So I think taking care of people and do things very safely, that is at least one thing I missed coming into blockchain and crypto, is how can you, if you want to do things good, and I mean, I represent also Volvo, I represent IKEA on their board, so I don't want to be in the Wild West. I want to do something I can put my name behind. And this is back to what we offer, that is to create trust and that you can do things in a safe environment. That, to my surprise, because it's not only, it's 2 years ago, I was sitting in New York when you could still travel in from Scandinavia to New York and other worlds, but I was sitting with a Bitcoin maximalist, and first he didn't want to speak with me because I was representing Concordium with ID at the protocol level, but then he understood I was Scandinavian, so that was nearly being a liberalist. So we got a coffee together. And I think we have moved a long way since that was hardly acceptable, that everybody now understands regulation is here. But as Chris also said, it's super confusing for people. What do you have to just the definition of your token is different if you are in a different legislation environment. So it's very confusing. Europe have its rules, Switzerland have its rules if you're moving cross-border, or even if you're in the US. So it's back to, unfortunately, the bad news is it's exactly as it is for banks and other regulated financial institutions. The good news is that regulators are really working. We have the 6th EU directive coming in. We have the new MiCA rules coming into Europe. The regulators are really working very fast in order to create clarity, and I think clarity is just what you need. So we see excitement. That is my answer to your question.
Fantastic. Thank you so much. And one of your taglines being "Science meets business" is a really an intriguing one as well. And I just want to kind of continue on the line of thought that you had there with regards to excitement, right? And the kind of the blurred lines where we see a lot of companies try to push excitement, right? You mentioned Tesla, but also in the crypto world. I mean, where is that kind of the border where you cross over between like excitement and maybe not lying, but maybe kind of, let's say, abusing of the truth? Is there some way where you can create enough excitement nowadays in the crypto space without kind of going off the edge?
I think if you're going like the other way around, we have our CTO is Torben Petersen. So he made the Petersen commitment, which is one of the fundamentals we're building into our blockchains. And also we have Professor Ivan Damgaard, who made the Damgaard-Merkle. So they are so, I say it with all my love, nerds, that it's really becoming exciting. So I think that nerdy excitement is what we want to create. But then when we say we have where science meets enterprises, for example, we have our white paper, and when you read the white paper and when you read our code, you should really recognize our white paper, our cryptographic proofs, which is all science-based, peer-reviewed protocols. You should be able to recognize that in the code, and that is what we are providing. So when you read that, it's not a hobby project. So there's a lot out there, and that's funny, and it's interesting to see, and people are ever so innovative. We're taking from this, we're taking from science, but ours is enterprise grade. So you can't build on something where you have backdoors, where it's breaking down. For example, we have finality, immediately finality. So we have the consensus, but also finality. Of course, it's important because most people don't think about if you have a probabilistic blockchain like Bitcoin, like Ethereum, it's never, theoretically, it's never 100% finalized, and you have a certain set of blocks before you can most likely think that it's finalized. If you want to use it for say, things which is going to work also for financial institution, these are the things you need to build in, like our finalization, like the low transactions fee, like everything is going towards now software certification. Our applications also out of our decentralized fintech lab will also be upgraded. So we will have a certain, say, quality stamp on, like you see on the Twitter accounts, a stamp. We will have that stamp on the application and reference protocol, so people know what they're using. Because there's a lot which is it's just test and trying, but I learned that also from working with Volvo. We also want to test, but we don't put a car on the street which doesn't work. You have to have a certain level of trust when you do things where people are relying on your software.
Fantastic. Very, very well said. And that actually jumps on to the next actually topic that we have today, which is trust, right? And Philipp, we were discussing a little bit about this, right? That trust, and more importantly, first party trust is the future. And actually from your website as well, Swarm Markets make every effort to be as trustless as possible. And I'd love for you to be able to comment for our audience today on what trustless means, because I've spoken actually to some people what trust is. They're like, no, but it needs to be trusted. So maybe you can tell us a little bit more about this.
Yeah, so the concept of trustlessness means that you don't have to trust a centralized body or a person in order to have trust in the system, which means that you can be completely absent of any trust in hoping to actually get what you expect from the system out of it, right? So in crypto, the sort of trustless nature is that you have the immediacy of what you're doing. It's your responsibility to hold the private key. You have to say what that private key executes and what it does with your assets. And so that's been there since the beginning of actually sort of blockchain playing a role. I think what DeFi has expanded on here is that basically you don't have to move your assets to any centralized body, even a centralized crypto exchange, in order to actually benefit from the transactional ability. You can allow mechanisms to come to your wallet, to execute within your wallet, and have full control along the way what you do. So this is generally a concept called self-custody and basically self-sovereignty in your decision making, right? So I think this is a foundational concept, because suddenly you don't have to divvy up your assets and sort of make sure that they go to other institutions in the banking landscape or in the fintech landscape, but you actually can work on that kind of control and that permission as a end consumer, and then decide whether you want the help of others to help you with I would call it first party distrust, where you may not trust yourself with the responsibility to hold the private key. You may actually need tools or mechanisms to help you manage that trust, to have a recoverability of the wallet, et cetera, right? So when we say, we as a regulated or licensed platform, we want to be as trustless as possible, which means we want to preserve these aspects of what actually has been the key element and the design factor of actually making DeFi successful, while still satisfying the need of the regulatory bodies to actually have that kind of access control in, who gets to do what, with what kind of assets, with what kind of methodologies, right? Because that is a necessity, and everyone, to Chris's point earlier about like what institutional investors cannot engage in, it's less about the counterparty risk in terms of like knowing the counterparty in this ecosystem, because, you know, that is pretty much smart contract based. It follows full transparency. What it does, however, mean is that you don't necessarily know who the other parties are on the other end of the transaction. So it's more an AML and, you know, sort of money laundering aspect than it is about the, you know, knowledge or the assessment whether something's going to successfully execute. So when you look at FATF and the travel rule and everything coming into the space in terms of the necessity of knowing two parties within a certain transaction, I think that's where it starts and actually should end. So we as a playground want to preserve the ability to create money Legos that are maybe new to the DeFi ecosystem in order to have people within that ecosystem still program themselves, you know, the ability to actually compose different products. And then at the end, still have the full control over their wallet actions, rather us meaning sort of being an intermediary, trying to take some part of that control and being able to, you know, influence that control. So it is about actually preserving those elements, which are quite key to the success of DeFi.
Fantastic. Thank you so much. And because we continue the topic of trust, there, you know, we were discussing a little bit about these DeFi scoring systems that you've created and fact sheets, etc. Does this help to bring more trust?
Inverse, right? The point of it is, as Philipp said, and the standards that we're all seeking to make transparent to everybody. You don't want to end up needing trust, right? One of the key elements, in my opinion, is where the pricing oracle is located if it's decentralized. Because if you're familiar with auditing the mempool, there's some shenanigans that can happen in between there, and there's latencies. You know, we come from kind of the HFT background. There are latencies, and so that tech is very similar to what we, you know, are used to on my team. So I think what we're looking at when we're scoring and rating these things are maximum open source, time on mainnet. We want to see everything from the keys, as Philipp said, where you want to have time without time lock, right? And who's permissioned, and what parties are permissionless, and basically get to the point where you're literally just taking no platform risk, no smart contract risk, to the degree that that's even possible. And we've seen enough events where folks like all of us on this call took the risk of, you know, putting our money in these different rabbit holes, right? Seeing if the smart contracts work in a panic. And I think May 17th was the exact day where I'm auditing all the comp and Aave and Uniswap and Sushi. I'm like, wow, every smart contract was perfect to the penny with the auto liquidations. So I think then it gets down to tokenomics and taxonomy. For me, I like participating in anything that's utilitarian, right? So if we're providing liquidity as a hedge fund, you know, what's the reward for the space, and then what's our reward for doing that, right? What's the depth like? And I think when you're looking at it from that perspective, you can get to the point where the tech is auditable and permissionless, as well as trustless, right? And that sort of narrows it to really about 25% of the existing infrastructure, in my opinion.
Oh, yeah, it's no longer needing trust. It feels a little bit, there's a little kind of friction there, but I think it seems natural in a way.
Yeah, the concept isn't a fun one to talk about, but the reality of it is that the point of blockchain is to dehuman everything, right? Take that risk out of it. Human is the risk, and then once you take it out, you're literally only taking two other kinds of risks: smart contract risk and price risk. And on finite assets, is price really a risk, right? So,
wow, fantastic. And maybe following that point, I mean, Philipp, you just had a new announcement, quite interesting one, integrating Wallet Connect, which part of it includes Ledger Live, access to 1.5 million people, and custody has an element of risk to it as well, to keep these people's assets future-proof, essentially. I mean, would you like to talk to us about that side or the trusted part, and can we grow in adoption through these type of partnerships as well?
Yeah, so I think there's, first of all, like, it's an extension to what I previously said. I think the self-custody is a big deal. So the self-custody is not just, you know, trying to empower individuals, but it's also, it's a way to empower the entire tool sets that have been created to help the ecosystem. And one of those tool sets, for example, on the professional custody side, is actually professional custody environments, which means that, you know, pretty much everyone who's on the professional side engaged in the space has, so far chosen their professional custody environment. And, they are finding ways from the evolution of those products to then connect with DeFi protocols as well on the other side, which means that, what's happened there is that basically it's figured out how to do multi-party computing. It's actually figured out how to do multi-signatures, how to rely sort of professional, institutional grade decision processes and have that being replicated on that kind of wallet signing infrastructure, which is a big deal. It's a really, really difficult process for professional engaged parties to figure that out and actually sort of have that instilled into a process that everyone feels comfortable around. So for us, it was a existential thing to figure out that can feed into those existing decisions, and we wouldn't expect that anyone would have to redefine that in order to participate in the tools and the solutions that we would bring to the table. So when we just announced sort of the connection with Wallet Connect, and obviously Ledger being sort of a key part of that, I think that's the same story, right? Where effectively there's a huge amount of people that have made a decision that Ledger in some shape and form is what they want to trust. And they're using that on different ways, either directly or through Ledger Live. And they have certain desires to deploy whatever is in those custody environments, in their own custody environments, to then be able sort of to extend that in a safe fashion so that the assets don't get tainted along the way. And secondly, because we are what we are, we can actually sort of introduce securities into that aspect as well. So you suddenly have a unified view using the same tools. You have a unified view to actually, use it on crypto assets, on DeFi assets, on, things that you're already comfortable with in the crypto space, but then actually expand that into other parts of the value ecosystem as well. So we'll see a massive amount of migration of, existing value onto this Internet of Value, which is Web3. And part of that key is, the existing tool sets that people have already made decisions on.
Fantastic. Thank you. Thank you so much. And although it's rather unfortunate, we do only have 5 minutes left here. So I'd love to leave you all a little bit of time to kind of conclude and how you see actually the DeFi space looking 5 years down the line, 10 years, or even 1 year down the line if things move so quickly. I mean, Lone, what are your thoughts?
Yeah, so I think we will see a matureness. We talk now about also all the software, whether it's safe, etc. I think the short answer is people simply don't know. There are too many who doesn't understand, so it's test and try. And there's been a lot of, say, maybe pocket money you have used for it, but you still need to see that things are really being tested. There are two kind of tests: that you trust the smart contracts, that they are doing what you actually want them to do, but also that there are kind of no flaws in the system. So several levels of test and trust. And I also think the established financial institution have a big thing to play here. I think you'll see them moving massively in when the regulation comes into place now, and they know what they have to deal with, because consumers are used to that you can trust your money to them. Yes, you might lose on the product, but you're not losing your money. There would be all kind of insurances. You do see that on some of the custodian wallets, etc. So there'll be new products, and I think the next couple of years is that things will organize themselves. You'll see the rating systems coming in. You will see a kind of a Morningstar system also coming into the crypto space. So I think the short answer is you'll see everything from the established financial world. You'll see that coming in the decentralized world, and there we can use and really enjoy for the benefit of the users. In the very end, you'll see that everything will be more mature, but you will see and that also today you see the high returns, but in any mature market, returns and margins are being smaller. But I think we'll see the big benefit, but it will be like one world. Now we talk about it as if it's two worlds. It will be one world.
Oh, fantastic. Yeah, hopefully some of those benefits of what's going on in the traditional financial world don't bring some of the weaknesses with it as well. But happy to hear your thoughts, Chris. Philipp, if you have some final closing words for us today.
Yeah, I'll respond real quick. I saw a question pop up, and technically, private hedge fund is an institution. I always think institutional investors are, pensions, endowments, fund of funds, et cetera, and banks. But from our perspective as an institution, where we're limited in terms of accessing DeFi is really the chain of the money, right? And then Philipp accurately pointed out where there's not AML KYC embedded in some of the chips or contracts. Those are the two sort of shields that our auditors, our lawyers, kind of prevent us from accessing. But any of the major ones that you're aware of, like top 5 venues, we can't do things like, Dino Swap and very, very exotic, hilariously marketed venues. But anything that's auditable that could sit in a ledger or MetaMask, those are things that we can participate in. And by way of me doing it, that means pretty much every institution should be doing it.
Yeah, so maybe 2 thoughts. I think DeFi will be Fi. And I'm betting my career on it, because I think that what we're seeing right now is that a lot of the banking institutions are seeing that the way that these unilateral silos are built, they're not made actually for the interconnectivity that actually today's modern financial ecosystem is deserving, right? So composability is not a small word. It's a big word to say that if you have the entry points of these, asset classes being sort of money Legos in some ways, and then having the composability for anyone who knows how to build successful financial products on top of it, it should be just a way to program these objects with one another, right? And by doing that, you suddenly have a revolution that creates efficiencies for existing financial players that are still very hard to sort of wrap your head around. But you could have UCITS funds have enforce the category engagement in certain asset classes by doing that programmatically. That's a traditional financial player enforcing whatever they promise to their investors using code, right? And so I think what's going to happen is to make that happen, and there's 3 things that have to happen. One is there's a clarification of regulatory things that which we're coming to a sort of better state with. But then it's actually stripping away complexities on the user front, which Lorna was referring to, which basically is the success is going to come when we don't know that we're using the blockchain, right? The other part is that actually this trustless nature is going to grow into other layers of the stack, which means, in the end, introducing real world assets into, a chain environment will have to not rely on people and dependencies, but actually has to be as trustless as possible. And then this composability will unfold. So I think in that trifecta, we're making strides in terms of progress, and it's going to go faster than people then expect it to happen. But it's going to be a pretty big revolution of the entire financial ecosystem, which so far has been built around very siloed ecosystems.
But remember, you can pre-verify and you can pre-validate, and that's the 2 key words. And this is why it's working for regulators. This is why it's working for banks. So with that, I will end my remark. As you say, DeFi will be Fi. I fully agree.
Lovely closing words. Lone, Philipp, Chris,
give lessons about how to use a MetaMask wallet to everybody. I think that's very important when you get the apparatus itself, and invite more participants in.
Great, wonderful. Well, you can reach out to our panelists here today if you want to learn how to operate your MetaMask. I feel like Chris will definitely be there to help you. And on that note, thank you so much to all the audience and everyone for being here and participating. And I'll leave you all to the next panel of the day. Victoria, off to you.
Thank you so much, Sheraz. Thank you, Lone. Thank you, Chris and Philipp. Very exciting panel discussion. And yeah, I also agree that DeFi will just be Fi in the future. I don't know. I think the first time I heard it was several months ago. Joseph Lubin said it. I'm not sure if he was the first one to say it. I was like, oh, that's smart. Yeah, that's true. DeFi is just going to be Fi in the future. So yeah, thank you very much for an exciting panel discussion. And to the audience, thank you for joining. Thank you for the questions, and reach out to them as well. You can reach out to Lone and Concordium in the sponsor area, and to Chris and Philipp via the People tab, and to Sheraz as well. Again, thank you guys, and we'll continue now with the next talk. See you in a bit.
Wonderful. Thank you. Bye.
Bye-bye.
Bye-bye.